Well, hello everyone. Today is Thursday. It's September 26th, and the market's about to close in about half an hour, and I wanted to give you some heads up. Sometimes I see something going on in the market, and it looks a little odd, and I want to bring it to your attention. Now, what you're looking at, this is a table right here of percentage of stocks in the S&P 500 that are trading above their respected moving averages. 20-day moving average, 50-day moving average, 150-day moving average, 200-day moving average. Now, why do we want to look at this instead of looking at a chart like this chart right here? Well, U.S. stocks are capitalized weighted. What does that mean? I've talked about this many times before. It means the bigger the stock in the chain, in the index, the more market capitalization it'll have, the more influence it'll have on the index. So, for example, Apple has a lot more market cap than a stock like Time Warner, for example. Okay, I gave you a pretty good example because Apple is the biggest stock in the world. It has the most market cap. So for every point Apple moves, it's like Time Warner moving 10 points or 15 or 20 points. So the larger the capitalization of a stock, the more influence it has on the index. And when you're looking at a price chart, it doesn't tell you the number of stocks moving higher or lower. It just gives you the controlling stocks influencing the graph. So when you're looking at market internals, it's simply the percentage of stocks, not the bigger the stock, the more influence it has. And I wanted to point this out because this is disturbing. If you look at the 200-day moving average, this is the number of stocks in the S&P 500 that are trading above the 200-day moving average. And the number is really high. It's at 67%. So less than 30, to give you an example, less than 33% of stocks in the S&P 500 are trading below the 200-day moving average. So if you're looking at the S&P 500, it's looking really bullish because over 67% of stocks are trading above the 200-day moving average. And typically, if more than 50% of stocks are trading above the 200-day moving average, the market is bullish. In this case, we have almost 70% of stocks. So this is a really ripe bullish market, but that's not the whole story. And this is why I like to look at market internals as opposed to looking at the graph. Take a look at the overall stock market. Let me show you the overall stock market because we're looking at here, market momentum. This is the overall stock market. This is the entire stock market. So if you look at the overall stock market, if you don't limit your search to 500 of the biggest stocks in the world, you'll notice that only 52% of stocks are trading above the 200-day moving average. So when you're looking at the overall market, it's not nearly as bullish as the S&P 500. This is about 2,500, 3,000 stocks, and the S&P 500 is 500 stocks. So the top 500 stocks are really bullish because 67% of stocks are trading above the 200-day moving average. But if you're looking at the broad market, only 52% of stocks are trading above the 200-day moving average. And that's telling us that the S&P 500 is grossly overbought in comparison to the overall market. Now, guess what? The S&P leads like a dog on a leash. It leads, but the human controlling the dog controls it. So one leads, but one controls. And guess what controls? The overall market. And the overall market is not looking that pretty right now. As a matter of fact, if you look at the Russell 2000, that's what the overall market is looking a lot more like right now. Let me show you this. Look at it. It's right at the 50-day moving average. It's not that bullish. It's been moving sideways now for about a year. And that's telling me that the S&P 500 is not giving us a true representation of what the stock market is doing right now. The Russell 2000 is. And the bond market is trading above the 200-day moving average. This is the 50-day moving average. It's trading above the 200-day and the 50-day moving average. And it's looking like it's ready to move higher. So overall, based on what I'm telling you, I believe the S&P 500, that's what we're looking at right now. We have some indicators on it. I believe it's already at the 50-day moving average. I believe we're going to hit the 200-day moving average, which is, let me show you where that is. I believe next stop is right around here, right around the 284 to 282 level. I think we're going lower because momentum levels across the board are not that strong. And more likely than not, the percentage of stocks in the S&P 500 at 67% level is going to go down into the 50s, equate or equalize itself with the overall market by being just a little bit above, not by being like 20% above. And in other words, again, look at 67.46%. There we go. Market's running away from me. Versus 52%. That's a strong distortion. And also, just to give you another, if you look at the graph here, it doesn't look that great either. This is the S&P 500 momentum. Let me change the settings for you so you could look at it on a line chart. Notice it's coming down. Momentum levels on the S&P are declining. I'm expecting weaker momentum, and I'm expecting the momentum level on the S&P 500 to be back in line with the overall market. So expect momentum levels to decline because of all the reasons I showed you. Hope this helps. If you guys are enjoying this, send us an email, roger@wealthpress.com. Talk to you soon. Take care and be careful out there.